Hi there, this is Patrick Belton of the InsurTech FinTech Revolution.com. In this short presentation brief, we're going to discuss the ecosystem economy and the insurance industry. Your firm must reinvent, reimagine, re-envision your business model because your traditional model is a failing model in the midst of this paradigm shift. The insurance industry is facing a paradigm shift, as is society. These do not come along often in the history of humanity. In fact, there's only about 4 or 5 that one could identify throughout history. And in fact, the most recent obvious one was the Industrial Revolution. So this paradigm shift is a fundamental transformation of our society and the way in which humans live. Did you know that ecosystems will account for approximately 30% of Canada's GDP, gross domestic product, and approximately 35% of all business revenues by the year 2025? The pace of change is dramatically accelerating to an extreme. Those who doubt will be swallowed whole by this. This extreme rapidity is fueled by things such as big data, mobility, artificial intelligence, and many other things that I can enumerate. The economy is shifting and is characterized by new, powerful economic models such as the distribution economy, the partnership economy, the subscription economy, the mobile economy, and obviously the digital economy, and I can mention a few others. Your organization's leadership must possess expertise and understanding in each of the economic model drivers in order to navigate your firm forward. Ignorance and failure of the true meaning of these models for your firm will deliver your company to the dust heap of history. No firm is immune, no matter how successful you are today, and no firm is too big to fail. Those holding meaningful market share now are by no means secure in their ability to maintain it. The conservative regulatory environment that is inherent to the insurance industry does provide some degree of insulation to these aggressive challenges that we are facing and are in the midst of this societal paradigm shift and all the upheaval that surrounds it. But that is really like applying brakes while you're driving on the Autobahn because someone cuts you off. It is a temporary effect and will not last. That is the effect of regulation, holding back the speed of change. It is just temporary. Your organization, your firm, needs to accelerate its efforts today, to adapt today, and to do so at breakneck speed now and not tomorrow. The rise of ecosystems is simultaneously where we face our greatest threats, but also our greatest opportunities and the greatest challenges of digitization. The wide adoption of digitization and associated technologies by the human race and all insurance consumers, rich and poor alike, has resulted in a society that is keenly dependent on these two things and that engenders all sorts of consequences for our firms. Society's newfound reliance on digitization and related technology has and is reshaping customer expectations. It is also redefining the boundaries between and across industries, including insurance. Insurance firms like yours cannot avoid these above referenced phenomena. As traditional insurance industry borders rapidly fall away, the future of insurance is being greatly influenced by platforms and ecosystems. And ecosystems arising stems directly from digitization. This rewards those organizations who are adaptable, agile, and responsive to change. Now, what I'm going to do right now is actually double back and just provide some basic definitions, because these provide the context for a discussion of ecosystem economy and digitization, but also some rudimentary understanding. So the first thing we should discuss is, what is an ecosystem? So obviously it's the most elementary definition we should discuss in a short presentation brief on that subject. So essentially, an ecosystem is the network of organizations and the interconnected set of services, including suppliers, distributors, customers, competitors, government agencies and processes, and products, and so on. So you get the idea. In any of these interconnected services and network of organizations that are involved in the delivery of a specific product or service through both competition and cooperation. Ecosystems allow for the users, the customers, and all participants within that ecosystem context to fulfill a variety of needs in one integrated experience. The idea that each entity in the ecosystem affects and is affected by the others, creating a constantly evolving relationship in which each entity must be flexible and adaptable in order to survive, sort of like in a biological ecosystem. Like natural ecosystems, the organizations, the firms involved in ecosystems compete for survival with adaptation and sometimes extinction. As a company, your organization must be viewed not as a single firm in the insurance industry, but henceforth must be viewed as a member of an ecosystem with its participants spanning across multiple industries and areas of society. In effect, the ecosystem consists of a network of interlinked companies that dynamically interact with each other through competition and cooperation to grow sales and survive. When the ecosystem thrives, it means that the participants have developed rational patterns of behavior that streamline the flow of ideas and talent and capital throughout the system. Ecosystems tend to emerge around fundamental human and organizational needs. The shape and composition of these ecosystems varies from country to country and region to region, in part due to variances in regulations and cultural customs and tastes and wants and needs. So what is a platform? Well, simply put, a platform is a business model that permits multiple participants to connect to it, to interact with one another, and to create value and exchange value. Examples of companies solely built on the platform business model, they lay all around us in society. Most of them you're familiar with. And these include well-known firms such as Facebook and Amazon as prime examples. What is the Internet of Things, IoT? Well, essentially, IoT refers to the growing range of connected devices such as sensors in household appliances, electronics and software, wearable devices, connected vehicles using telematics that can transmit and send and exchange data across the internet without human intervention using technologies such as Wi-Fi and Bluetooth. So it is the interconnection via the internet of computing devices embedded in everyday objects, enabling those to send and receive data. So what is artificial intelligence, AI, and what is machine learning? So, well, let's go to AI first. Typically, it's defined as the ability of a machine to perform cognitive functions that we associate with human minds, such as perceiving, reasoning, learning, and problem solving. Now, machine learning, this is the major approach that's used today to realize artificial intelligence, and in effect, it's a subset of AI. So rather than being explicitly programmed, machine learning detects patterns and improves itself with new data and experiences. Machine learning uses computer algorithms, which are a set of rules, to parse through data. So it's breaking the data into its component parts, and then it's learning from that data and making informed decisions based on what it has learned. So, if I gave you a simple example, I was involved with a firm that was applying AI and machine learning in a bunch of different industry sectors. And to use an example in the construction industry, when we were test piloting the application of AI on a construction site, if you think of the naked eye watching someone pour concrete, we can see 3 or 4 data points with our naked eye, maybe 5. If you use machine learning, you'll see 300,000 or 400,000 data points, or maybe 6,000 or 7,000 data points, something like that. But if you use artificial intelligence, you'll see 7 million or 10 million data points with the same look. So it's just the power of being able to see in effect. So let's briefly define what is deep learning as well as what is cognitive computing. So let's start with cognitive computing. Essentially, it is the simulation of human thought processes in a computerized model. The goal of cognitive computing is to create automated IT systems that are capable of solving problems without requiring human assistance. So infusing intelligence into systems and processes can help your organization increase efficiency, improve customer satisfaction, uncover new business opportunities, and mitigate risks and threats proactively. Now, as for deep learning, what is deep learning? It's a type of machine learning that can process a wide range of data resources. It requires less data pre-processing by humans, and it can often produce more accurate results than traditional machine learning approaches. And this is accomplished through interconnected layers of software-based calculators known as neurons to form a neural network. Ecosystems essentially drive value in 3 key areas. The first is by acting as a gateway, thereby reducing friction. The second is by harnessing the effects of networks. And the third is by integrating data across the series of services offered. So let's just expand briefly on each of those about where ecosystems drive value. So the first area is by acting as a gateway and reducing friction for your customers who are switching across related services. An example that I can identify that you can relate to is that of Facebook Messenger service, as it enables not just communication between friends, but it also allows for the customer, the user, to shop, to check into a hotel, to read the news, and also chat with a doctor. And all of this is accomplished through a single interface. Really, when you think about it, it is absolute brilliance. Now I ask you, what have you envisioned along these lines for your insurance organization? Number two, where an area where ecosystems drive value. The second one is by harnessing the effects of networks. What this means, by way of an example that you can relate to, is Google. Google has created an ecosystem of smart home products, and this entails giving customers monthly report cards illustrating their energy consumption while comparing it to that of their immediate neighbors, which provides context to those numbers, and that's invaluable. So this actually may alter their behavior and their energy usage going forward, or it may actually cause them to invest in energy-saving renovations and equipment. So Google it's also creating some value for the energy companies by providing consolidated information regarding demand, which helps the energy company optimize production. So the third area where ecosystems drive value concerns by the means of integrating data across the series of services. So in speaking to this, in my experiences with artificial intelligence software and applying it to some different industries, I became familiar with a really good example. And that concerns a healthcare data company actually, which was extracting high fidelity data from the healthcare ecosystem and then applying it to the lives of patients in order to improve their health and human health outside of those particular patients themselves. Now let's dive in and expand a bit about what you must consider and think about as far as your firm, your organization, living amongst digital ecosystems. So think about this. Your firm needs to shift its perspective from that of an industry perspective to that of an ecosystem perspective. And this requires you to, well, me as well, it requires all of us to make a significant change in the way in which we define our role in the economy. So not just the way in which we define our role in the insurance industry. So if we just define our role within the confines of the insurance industry, then we have limited our revenue opportunities. We've limited our boundaries to traditionally conceived ones. And in fact, we've ensured that our firm, our insurance organization, will not survive over the next decade. Whereas if you were to define your organization's role in the broader economy, then that will enable you, because you will be able to imagine new revenue opportunities, both within the insurance ecosystem, but also new revenue opportunities for your organization outside of the insurance industry. The way that our insurance industry operates currently is that carriers, insurance carriers, companies, have essentially, they just act as risk aggregators, whereas insurance brokerages are acting as client distributors. So if you look at this from actually both the carrier perspective, but also even more critically from the insurance brokerage perspective, is that they're deliberately, consciously, they have chosen to have a passive and a limited relationship with their customers. So that's whether you're a brokerage or a carrier. And this approach, in turn, is increasing your organization's exposure to things like disintermediation, to commoditization, to disaggregation, and bluntly, to invisibility to your very customer base. So I ask you, why would your organization, why would any insurance firm deliberately seek, through its actions and business strategy, to be invisible to its customers and the other consumers that you still hope to win over? So I pose that question to you, but the truth is, what have you actually done about it? Because that's the path you've walked down, especially in the brokerage channel in Canada. The fact is that many brokers in Canada, and really the brokerage channel, broadly speaking, is in real danger of losing its distribution and customer relationships. This is a wake-up call. If that occurs, then your brokerage firm is going to be hard-pressed to reinvent its business model. It's going to be too late. But, however, look, there is hope. And hope lies in the fact that you can choose to adopt an ecosystem perspective, which entails reevaluating all the traditional business models and considering your partnerships with players both within and outside the industry. This, in turn, will invigorate your digitization strategy and the follow-through on the execution. Your organization's digitization success is not always so much about capital, as really that's easy to find for your firm. It is about your imagination and the follow-through on that re-envisioning with successful execution. And this means you've got to do this through risk-taking initiatives. And I'll warn you, some of those are going to fail, but you need to embrace failure, because through that, there's a process of discovery where you will find opportunities to generate revenues and transform your business model. Now let's just touch upon the concept of what I call the new insurance organization, quote unquote. So the new insurance organization is able to effectively play multiple roles in an ecosystem. So I'm saying that your organization can play multiple roles in an ecosystem and outside it with other ecosystems. An example of this would be the personal mobility ecosystem, which offers many opportunities for your insurance organization to expand into complementary areas to find new revenues, such as vehicle purchasing, vehicle maintenance, ride sharing, carpooling, traffic management, vehicle connectivity, parking, lots of things. What this means is that you can expand your firm's role and that you essentially become an ecosystem orchestra director, where you have some measure of control over steering your firm's future. Actually, I would say it actually means you've chosen to have a future. So this may be confusing a bit. What I'm saying is that you've got your insurance organization, whether you're a carrier or a broker or MGA, you have your traditionally conceived methods of creating revenues, premiums and commissions and whatnot, and ways of doing that through selling products. What I'm saying is you have to step outside of yourselves. Look at all these other ecosystems and industries that interact with the insurance industry. You want to find revenues in those other businesses that complement your business. Now, this may not mean, so say for instance, if you do auto insurance, it doesn't mean you have to go into the parking lot business per se, or go buy a whole chain of body shops like Intact Insurance did last year in Canada. But what it does mean is that perhaps you could have cooperation with some of these other firms in neighboring ecosystems, and you can find a means of generating some sources of revenues from them. The point is that you're not limiting your insurance firm's revenues and customer base to just that of the insurance ecosystem. You are looking in other ecosystems to find customers, other ecosystems to find revenues for your insurance organization. That's the bottom line. This is why you need to change how you think. You have to go into an area where you are not comfortable. If you do not do this, you will be out of business in 10 years. Your traditional firm will be redundant in this decade. So wake up and be alert and change your business model. If your insurance organization is effectively and conceived as a traditional insurance organization, and the fact is most of you are, then you are inherently at a disadvantage in the mobility ecosystem and anything attaching to the mobility industry, which, by the way, is in the midst of significant technology disruption. So at the end of the day, your organization is facing a pressing need to reimagine your role or roles with the ecosystem mindset pervading and overarching that. Your organization and your leadership must cease to think and imagine like an insurance person. Instead, you must conceive as a member of society, broader society, and then work back from there about what products and services and associations you're offering to your customer and your consumer base. And let's just think of one fact. The connected car ecosystem that is emerging in society today, rapidly, by the way. Think of this. 99% of Canadian vehicles on the road by 2025 will be connected digitally. So this offers benefits, obviously, not to just the consumer, but to many organizations, but significantly, including insurance organizations. There's benefits to that, especially with efficiency and claim settlements. But there's inherent risks, significant risks, especially in the auto insurance sales arena, in the auto insurance arena. I'm not going to elaborate and enumerate all of those specific risks because they're critical to the future of your insurance organization, in particular the broker channel, any brokerage operation that's dependent on a meaningful portion of its revenue from auto insurance. Look, I can tell you right now, it's 2020. By 2030, you won't have those revenues. They're gone. So they're gone to the auto manufacturers, to the big insurance carriers, and to the direct writers. You cannot play in that space. You cannot compete. So get out of it now and migrate your insurance organization into the commercial insurance space and some other areas and personal lines, but stay out of auto. You must consider whether your organization will ever be equipped to compete in this auto insurance arena. And the fact is, as you can tell, I don't believe most brokerages will be able to compete in this auto insurance arena, including actually some smaller insurance carriers. I'd say makes the same comment. So what I'm telling you is abandon it in favor of non-auto related consumers. And if you look at the Canadian marketplace today, it exceeds $20 billion, in terms of auto insurance premiums. Now, there's nobody who can run a mathematical model and precisely predict by 2030 how much auto insurance premium will be purchased. But based on trends in society, in terms of the younger generation under 35 who are less inclined to purchase a vehicle and to desire having their own vehicle, unlike previous generations, and B, with the migration of people into urban centers and relying on public transit or carpooling or Uber and ride sharing platforms, or simply walking and biking to work and using scooters to go to work. So that's reducing car purchases and demands on premium. So Canada's got this immigration bubble, which we've had sustained for year after year for decades, which has caused the insurance premium purchases to increase. But that's artificial in a sense, because when you look at the under 35 age generation, less desire to buy a car, people are migrating to cities, relying on means of transportation to go to work and shop without having their own vehicle. These trends are not good over the next 10 years in terms of the auto insurance premium written in Canada. So one can expect the total premium purchased for auto premium or vehicle premiums will reduce. And also self-driving vehicles, by the way, the actuaries working with some of the development of these down different parts of the world and developing insurance rate models are seeing that the incident rate with the self-driven vehicles is dramatically superior to humans driving those cars. So we would expect that if you have a self-driven car, let's say your premium might be $1,500 a year. Whereas if you insure that same car with a human driving it, it might be, say, $4,000 a year. So the point is we're going to have declining premiums on a per vehicle basis. So all this does not add up well if you're distributing auto insurance. So you have to assume then, whether you're a broker, that your commissions are going to drop, or if you're a carrier, you're going to take in less premium. So you have to say, can I play in this space? Do I want to play in this space? But make that decision over the next year. and then position your organization going forward into areas where you can effectively compete. But I'm telling you right now, if you're a brokerage channel competing in the mobility economy and mobility ecosystem, is going to prove very, very difficult for you. And I want to keep adding on to this because, like, I'm saying all of this lack of ability to compete, especially for the brokerage channel, it's partly due to recent innovations, which have caused massive disruption. And this, in turn, has resulted in 4 key but natural stakeholders in the mobility ecosystem. And these are the original equipment manufacturers, General Motors, Toyota, high-tech players, insurance carriers, and telecom providers. Those are the 4 key players. And if you notice, I never mentioned insurance brokers because you're sitting out in left field. Independent brokerages have been effectively squeezed out of this ecosystem. So for your insurance brokerage to play in this ecosystem, it would mean that you must also be a stakeholder like those other 4 stakeholders. But the thing is, you're not. And then you would have to evolve from that position to that of an orchestra director. So you go from being just a stakeholder to someone who's like an orchestra director, which means you're kind of navigating and directing, steering your own future to a degree. But as a little independent brokerage, you don't have that ability. So to succeed in this auto insurance arena, your brokerage is going to need to be an orchestra director in 3 or 4 main areas, which are customer relationships, network management, service management, and analytics. So how well is your firm doing in this? I ask you that question. You know the answer. So considering this is on your brokerage's doorstep right now, literally today, what have you, your leadership group, as a firm actually done about any of this? Are you even discussing it? So my question to you, is it a case of too little, too late? You know, insurance carriers are greatly advantaged over the brokerage channel because they have a much stronger foundation in mobility due to their current customer base, their distribution prowess, and their requisite stock of personal data from auto insurance policies. Brokerages have not been collecting that data and aggregating it for years, which is what they should have been doing. They have not been making that investment. So thus, when you take all this into consideration, your brokerage to effectively compete in the auto insurance distribution space going forward, you would have to position yourselves as a true, legitimate ecosystem player, like those other stakeholders I mentioned, in order to fend off the moves by all these stakeholders, the car manufacturers and the insurance carriers. This means that your brokerage would need to build capabilities in a number of areas, such as mobile sensors, analytical tools, and customer interfaces. So I ask you, what is your brokerage doing about that? Are you even discussing it? And keep in mind that telematics have resulted in profit pools being under threat due to stiff competition, which only becomes exacerbated in the ecosystem economy. And this in turn fosters lower compensation for distributors like your brokerage. As well, it fosters and advantages the insurance carriers who can go direct and more efficiently bypass the brokerage channel and other independents. As we witness the original equipment manufacturers, Toyota and General Motors and whatnot, they're taking from conception to action by line fitting telematics devices on their vehicles or into their vehicles. And they're opening up their own ride sharing services alongside the Ubers of the world. And as we, as insurance people, traditional ones, watch these ride sharing firms master network management, it means that traditional insurance organizations must move well beyond that of being risk aggregators and focus more on risk prevention. All of this being said, we must continue to understand that while insurance products and related security services will remain at the core of the insurance business, there are services such as telematics that are a way of developing deep and profound customer relationships. A carrier can do this in the auto insurance arena, but can your little brokerage or medium-sized brokerage or even a large one like Hub Insurance in Canada. They're not doing anything about this. They have a passive relationship with their customer base. And keep in mind, I've already briefly mentioned this, but insurance carriers are working with and alongside ride-sharing firms, as well as like Uber, as well as the original equipment manufacturers like General Motors and technology players such as Google. So the carriers are way up the value chain in their efforts to develop products and address risks auto manufacturers will see as autonomous vehicles come to dominate the marketplace and society. I do not currently see the insurance brokerage channel in Canada sitting at this table. Do you? I don't. I also do not see the insurance brokerage channel getting a seat at this table. Do you? Posing the question. So with no seat at that table, how can an insurance brokerage compete in the auto insurance arena? So the point is, abandon it strategically. It's a failing proposition for you over the next decade. So if you're an independent, smaller type distributor relative to the Intacts and Avivas of the world, focus on product areas and ecosystems where you can realistically and successfully play. And think about this. Individual consumers are about to relinquish their control over driving by embracing autonomous vehicles, which I've already mentioned. So this means that we as an insurance distribution organization, if that's what your firm is doing, must shift its coverage pursuits from personal lines to commercial lines. It means that your firm must, and your leadership must widen its scope of engagement to locate new sources of revenues, ones that are not traditionally conceived by you and your firm. And let's add more on this. To compete in this auto insurance space, going forward, your brokerage would have to develop a strong relationship with the original equipment manufacturers like Toyota and General Motors and Ford, all of those types of firms of the world. But also you'd have to develop strong relationships with the high technology players such as Google and Apple and Amazon. And this would in turn allow your brokerage then to assimilate into those firms' existing product and service offerings. But the truth is, Timbuktu brokerage from whatever province in Canada is not getting a seat at that table with firms of that ilk. So what I'm saying again is you cannot compete in the auto insurance arena. The thing is, do you really think it is realistic for your brokerage to assimilate into those service and product offerings and manufacturing processes? You're not securing that seat at that table. So I ask again, why are you in the auto insurance arena today? You cannot succeed in it. Your firm will squander and waste fruitless resources, both human and capital, on a wasteful exercise of competing with these global giants and industry giants. You must, as a brokerage and a smaller insurance carrier, you must select your fights carefully and choose only those that you can realistically win in. Auto insurance is not one of those fights that you can win in. Consider this. The manufacturers, ride-sharing firms, and technology players include in their offerings pay-as-you-drive and pay-as-you-go modeling, loyalty, and gamification, emergency and breakdown services, and crash assistance and theft reporting. I ask you, where does your brokerage play in all of that? The answer is axiomatic. It points in one direction: abandon the auto insurance arena entirely. So my previous slide, the content was pretty negative, but it was only negative about the auto insurance arena. I was very specific to that, especially if you're in the brokerage channel. But now let's be positive. What must you do to succeed, your leadership group in your insurance organization? What actions must you take to not just thrive, but thrive in the ecosystem economy? Well, look, your organization employees must shift their perspective from an old-fashioned, outdated insurance industry perspective to that of an ecosystem perspective. This is number one. Failure to do so immediately will result in the failure of your firm, not just in lost revenues. Number two, your organization must sell by developing communities which become integrated with your ecosystems that you participate in. Number 3, your organization's success stems from developing partnerships. You must understand the partnership economy and attack it with vigor. The next point, you must take a holistic view of the insurance industry as it is set in our societal paradigm shift. Then reconceive your business model out of that. Next point, you must devise and implement an ecosystem strategy. This will require sustained dedication and commitment by your leadership team and your employee base. And you need to choose only the ecosystems that your firm knows it can thrive and win in. Next point. Your organization will only succeed with managers, leadership, and executives who, quote unquote, buy in and who drive strong performance across multiple company dimensions, including culture, technology, customer engagement, which is changing radically, among other things. Next point, action point. The chief executive officer of your firm must accurately assess whether or not a given manager or executive possesses the requisite horsepower to succeed within this shifting paradigm. So if they do not, if a vice president or a supervisor or manager, if the CEO deems that they do not have that horsepower to understand this new economy, then you've got to move on quickly from that individual. Termination is your only option. Likewise, the chief executive officer must assess whether or not the firm as a whole and in the individual arenas of culture and data and so forth possesses the horsepower to move forward. Next action point. As an insurance organization, one must take a hard look at traditional roles familiar to any of us, as well as our business model and other models that we are aware of. Your firm, must then act by partnering with players in other industries beyond what you normally conceive of. So get creative and think outside the box and act outside the box. Next action point. Your organization cannot succeed unless its executives deeply understand the way in which ecosystems are shifting value pools and changing the very nature of risk. This is fundamental. So provided that your organization and its executives and leadership team come to comprehend this new landscape, then as a firm, you will discover new sources of revenues, many of which, by the way, have nothing to do with selling insurance. Next action point. Your organization, your leadership must re-envision, must reimagine, and must reconceive what your business is, what insurance is and is not. Think of this. Consider that Apple is now much more than a technology manufacturer. Facebook is a way of life. So now let's discuss briefly partnerships, the partnership economy, which is a key element of the broader ecosystem economy. Partnerships are critical to the success of your insurance organization in the ecosystem economy. Part of what does this mean? Well, essentially it means about 5 or 6 key items. One of those is that you must collaborate with anyone and everyone. I know it sounds simple, but I'm being literal. So what is your leadership team, what is your executive team actually doing to execute that? And the collaboration is not just the traditional collaborations you think of if you're a broker, need a software provider, or a CRM system. It extends beyond the boundaries of the insurance industry. Your search for new platforms, new communities of customers, and other things to grow your revenues and secure your business. Another item is that to consider is that any employee of your insurance organization and leadership group who adheres to traditional boundaries, to traditional barriers, to traditional competitive attitudes and approaches, you're bringing tremendous harm to your firm. and you're doing a dramatic disservice to your company. And you're actually legitimately threatening its future viability. And I'm not overstating that. So in establishing that so far in our brief, that ecosystems result in insurance organizations having to move from being solely risk aggregators to that of risk preventers, this entails developing partnerships such as partnering with IoT, Internet of Things providers, because this is something that can help your organization to offset its inbred disadvantage in terms of lack of customer touch points and lack of customer engagement. Your insurance organization, in particular brokers, must adopt a mindset of assembling alliances and partnerships. And the fallacy of many Canadian brokers is they think they're terrific in customer engagement. But the truth is, they don't get it, they don't understand it, and they're largely invisible to their customer base. And carriers are as well, for the most part. So what this gets at is that it means establishing partnerships with technology startups, with data firms, with analytic firms, and so forth. I can give you an example of this in the United States would be Progressive Insurance Company, which partnered with Zuby. And Zuby is a vehicle tracking and engine diagnostic device. So Progressive Insurance thought they could give their customers sight lines into how their driving habits are affecting their premiums. So that's a really good collaboration example. It's one probably some of you are familiar with anyways. So I ask you in your leadership group, where do you fit into that equation I just mentioned about Zuby and Progressive Insurance Company? Because I don't see the broker in that anywhere. The brokerage channel is absent from that discussion and participation. So, and I'll give you another example. It involves Liberty Mutual Insurance Company in the US, where they partnered with the company Nest. And Nest provided smoke detectors to insureds, and that cost was offset by monthly homeowners discounts tied to the Nest product. I'll give you another example. It involves Munich Re, which was partnered with a company called Digital Partners, which is their effort to partner with insurance disruptors by nurturing an ecosystem that supports the development of startups, which include a really well-known one, Trove Insurance, which is an on-demand insurance provider through smartphones only. That's what Trove is. So again, when you look at these, the brokerage channel is absent from those examples. So the brokerage channel must revisit its business model and its value chain. Now, if you look at your organization, a traditionally conceived insurance organization, in particular in Canada, you must be alert to the fact that you're being targeted in your traditional value chain by all manner of insurtech companies and technology firms and just simply emerging technology like blockchain. You're being targeted by those as much as you are by traditional insurance industry competitors. So to date, if you look at 2020, isolate on the insurtechs, well, these insurtechs have limited their focus on easily accessible slivers of our insurance industry, mainly on the distribution side in property and casualty insurance. So in other words, they're launching direct frontal attacks on a broker's operating space and some of the smaller insurance carriers. So I ask you, how is your insurance organization responding to this frontal attack? Are you doing enough? Are you moving fast enough? Do you have the right personnel and management positions to carry your organization forward successfully in this ecosystem environment? The truth is, most of you don't. Therefore, if you look at this, it's axiomatic that since insurtechs and emerging technology are working at attacking your organization's area of the value chain, then you must partner with one or more of them to preserve and advance your firm's best interests. The continuing elevation of ecosystems in society, it involves multiple firms coming together in symbiotic relationships in order to achieve greater value for your organization than you would otherwise capture alone. A really good example of this involves Apple and their desire to participate in the health ecosystem. In this case, Apple launched its HealthKit open platform, which offers Apple device users the option to share their health and activity data across affiliated applications on the Apple smartphones. Many of you are familiar with that. I use this daily. So this integration involves participants, which include Apple, but also include the consumer, you, doctors and researchers, hospitals, universities, tech developers, to access data on the patient care, research studies, marketing, product development, and so forth. So take that exact example and apply that to the insurance industry and the insurance ecosystem in Canada, and then start envisioning your organization, how it's going to fit into that exact type of business model. Like, your traditionally conceived model cannot survive in what I just described in that healthcare example with Apple. And this is where the insurance industry in Canada is going. So what is your leadership team doing about it? Now let's move on and dive into the customer relationship. And this is a critical discussion when we're keeping in mind the ecosystem economy, the paradigm shift, and partnership economy. So look, at its essence, the customer relationship, insurance carriers, brokerages, MGAs, the traditionally conceived business models that they operate on. What you must all understand is that the value pools are shifting aggressively as technology providers and technology itself make incursions into the insurance industry because they own the technology pathway. The brokerage channel doesn't, because it's been passive for decades and uses just third-party outsourced solutions and remains ignorant of technology. These are direct, full frontal attacks on your customer relationships in your traditional insurance organization. You must wake up. Your business model is antiquated and failing you. Even if you're successful and have great net profits, your traditional organization won't be around in 2030 if you don't change today. Your organization, you, your leadership group, your employees, you must own the customer relationship and not cede any ground in this respect to insurance carriers or technology players if you are in the brokerage channel. Although there are certain situations where the customer relationship will be shared among those ecosystem partners and collaborators. But brokerage channel must stop ceding ground. And this means a whole bunch of things. But your customers, think about this, your customers wake up to a world every single day in which their needs are addressed through their smartphones. So how has your leadership group, how has your firm, your organization, how have your employees acted on that reality within the context of your business model? The fact is, pretty much none of you have. So the digital society that we now reside in requires you to place the customer at the center of every digital activity and business activity of your organization. But has your organization, have you, your leadership group, have you actually done this? And have you even done this in your strategic planning, not just your operational execution? So one's mindset must radically change overnight to adapt to this reality. And the pace of change is so rapid that strategic planning cannot take place annually or in 5-year segments. That's a thing of the past. It literally must be done monthly. In fact, even bi-monthly, every couple of weeks at worst. Otherwise, you're falling further and further behind. Now, look, there is economic value that one can capture if you place the customer at the center of your digital activities and your business activities. So to that end, you must develop digital ecosystems around customers in order to survive and grow your revenues. Now, I know what a lot of you brokers are saying out there, because I've heard this for decades. Oh, we've got great relationships with our customers and we're all about the customer. If you really sincerely examine your operation, you have failed in that endeavor. You are invisible to your customer base. So wake up. And technology and the ecosystem economy changes the nature of the customer relationship, but you're not adapting your business model. So wake up. Your organization needs to realize the obvious, that your distribution channel, the brokerage distribution channel I'm talking about now, has been the target of disruption, primarily because digital natives, technology players, and outside slicers have done a critical thing. They have successfully shown that ownership of the customer relationship is a stepping stone to an ecosystem play. So, and it's an ecosystem play, once they get that formula right, that's going to marginalize you traditional players in the marketplace, and you will see eroding revenues and an eroding customer base in your firm. Now, because the core of the insurance industry is so highly regulated, the industry does, and a lot of your traditional firms do possess an inherent competitive advantage as a result of your regulatory skills and knowledge, and also even with the capital requirements needed to advance disruption in your insurance business. And to make an ecosystem play yourself, that involves the insurance industry. So you can actually get ahead of this game. You don't need to just sit back and respond to these slicers and emerging technology. You can take full control of this yourself. But within our industry, insurance carriers are advantaged inherently over firms, brokerages in the brokerage channel, simply due to their carriers have a greater availability on the capital front, relatively speaking. There's greater resources of internal data that has been warehoused in those firms, and that gives them a massive advantage over the brokerage channel. So brokers need to come together, collaborate with some of their competitors in order to be able to attack directly carriers in this regard. Now, in making some observations regarding fintechs, I would say that they may or may not kill off banks one at a time in certain Western countries. A lot would think that would be an exaggeration. But one thing is for certain, or appears to be, and that's that fintechs are likely to destroy or at least sap the banking sector's profitability. So this raises the question whether insurtechs will have that same type of impact in terms of softening up and destroying the insurance industry's profitability, or at least normally where that's being accrued from. And if that was to be the case, it's the brokerage channel that's going to take the brunt of that. So I have to ask you this, or think about this, becoming marginally profitable while residing in a heavily regulated sector, that's not a glamorous future for your brokerage or MGA. Really think about that. It's actually profound. Becoming marginally profitable while residing in a heavily regulated sector doesn't look like you have a great future. So considering your customer relationships that you currently have in the traditional operating model, you must be realistic and realize that ecosystem players like Amazon, like Google, are better positioned than you are at your organization. They're better positioned to invade all of our insurance value chain, your firm's insurance value chain. You must also acknowledge that the Googles and Amazons of the world have declared, at least internally, to their firms, their intent to do just this. So it's a question of when some firms like that will do it, not if. So how has your insurance organization planned for this? What actions have you taken to navigate this direct frontal attack on your current sources of revenues? And what are you doing to discover new sources of revenues for your insurance organization? Google is in a position to seize advantage of its collected data from Google AdWords involving insurance sales and service, among other things. It can easily leverage this to invade your organization's value chain. I ask again, how does your firm navigate this? What is your firm doing about it in strategic planning? And what actions are you taking coming out of that planning? So look, standing back at a moon to earth perspective, so go up to the moon and look down on Earth, we can see that Google has mastered the human-computer interface. And this, in turn, fundamentally altered the customer relationship landscape. Bottom line. Now add to this observance something involving Amazon. Amazon has mastered the next customer engagement interaction frontier, which involves voice. Amazon Alexa, which is world-leading technology. Amazon Alexa, as most of you know, uses speech recognition to perform a growing range of tasks on command. Amazon calls the built-in brains, obviously, of this Alexa. So you add to these two observances another one involving Liberty Mutual Insurance Company in the United States, which has been adding Amazon Alexa tools which allow their customers, their users, to obtain insurance estimates and advice on residential and auto issues and policies online, of course. Our conception, your conception, of the customer relationship at your organization, especially insurance brokerages, must be radically different than it is at present. Your customer relationships going forward must create a user experience, a customer experience, and provide wide access to related information to customers beyond just insurance. For example, here's an obvious one. When gale force winds are blowing into your city or a hurricane is coming in. I was in Halifax last year for the hurricane, so it's a perfect example. Well, why wouldn't your brokerage or your insurance organization, your carrier, warn your customers in advance? The day of, the day before, 2 days before, sending safety messages. This can be done by email, by phone, by text messages, all matter of communications, online media, obviously. So these re-envisioned customer relationships within the ecosystem society result in your organization accessing the holy grail in modern day terms, which is data, because you will have multiple avenues into customer information by pursuing multiple avenues of engagement with your customers. So look, key to your customer engagement and your strategy and your data culture and everything is you've got to take ownership, taking ownership of data, accessing new avenues of data via partnerships through the development of ecosystems by your organization is a necessity to survive and thrive in the new economic and societal era that we're living in. Areas of products and services such as auto insurance related, where we can clearly see that many of us in our industry and at your organization you're on the outside of the data, outside of connectivity, outside of the sensor world. So you have to consider abandoning certain products like auto insurance in favor of arenas where you have your organization and you have secured better and more direct access to customer data. This is advanced by your firm taking advantage of IoT, Internet of Things, which you must adopt now in order to create revenue and customer engagement opportunities, and which fosters better and more frequent customer interactions. An example of this is sensors based in homes or on articles that, when compromised and thus resulting in an insured event, automatically engages a trigger-based claims payment via apps. Trove Insurance in the United States is engaging in this manner. In a really simple example is if you just consider if you're driving a car, your car is outfitted with sensors all over it in the engine and other component parts. You get rear-ended. Instantly, the sensors through the Internet of Things notify your carrier, notify the claims adjuster, notify the Clear Service Center, indicates instantly to tell you where to go to repair that bumper. That because the car is outfitted with sensors, the sensors detect precisely what the damage is. And then the payment's automatically forwarded to your bank account. This all happens in a matter of minutes. See, there's no role for a broker in there. There's no role for a claims adjuster, and there's no role for a lawyer actually either. So look, as far as your customer relationships go for your organization, I will leave you with this. A massive Chinese insurance company called Ping An has now expanded, or a few years ago, expanded into offering healthcare consultations, automobile sales, real estate listings, and banking services, among other things, to its online insurance customers through a single customer interface, similar to a couple of the digital platforms in Canada, but obviously way more advanced. Why are we not doing this? Why is your organization not doing this? Doing this would involve your firm to a consumer marketplace, which is inherently dynamic. So you're not just an insurance organization selling insurance, you actually become a marketplace for insurance and other products, which this is part of the ecosystem economy. So now let's just briefly touch upon risk engines and analytics and how those might actually advantage your organization. As an incumbent and a traditional insurance organization, you actually do possess inherent advantages when it comes to analytic capabilities and familiarity when compared to other industries that we can observe that have been and are under assault. This is simply because analytics have been at the core of the traditional insurance business model in some form for a very long time. So you can leverage this traditional incumbent knowledge with analytics through embracing digital ecosystems, which will lead you to expanding your business models and locating new sources of revenue. In part, this means that you are evolving your firm to advance risk assessments and safety measures through the use of something like Amazon Alexa for connected home solutions for your insurance customers. This same data must be applied to your online products for better, nuanced pricing and risk controls and risk mitigation. The data that you accumulate through your online insurance sales and in traditional insurance sales as well must be used for modeling to change your customer interactions, change your approaches to risk, develop new products and services, and in seeking out creatively new partnerships to advance your participation in relevant ecosystems. Your organization, you are in a position to provide your data and inherent analytic abilities as a service to other industry players and people outside the industry as well, but only if you are digital ecosystem players. So that is your challenge, to become a digital ecosystem player. Now let's briefly touch upon the nature of insurance risk, which is changing fundamentally, I might add. So the risks that need to be insured, if they are changing, well, what are the reasons for them? Well, essentially there are two reasons for this. The first concerns this area. With the insurance industry, we have historically always understood that with measuring risk, pricing risk, and understanding risk, that a certain amount of uncertainty goes along with that. But going forward, this uncertainty is being reduced significantly as tracking and predictive technologies improve. Examples of this are, first of all, A and B. A, connected vehicles, which are statistically proven to have fewer accidents and mechanical breakdowns. B, predictive maintenance reduces business interruptions. Now, the second point that addresses why the nature of insurance risk is changing is this. Actuarial models and risk distribution are changing significantly. For example, the result of demutualization, and actually, by the way, mutuals are at risk, very much at risk within this paradigm shift that I've been referring to. But the result of demutualization may give, for certain insurance carriers, may give cause to shift the focus to predicting and managing the risks of individuals rather than communities. This is key. So this shift will cause premiums to be under pressure, thereby reducing traditional stable revenues. Unless the mutuals find new markets to find new revenues, then they will cease to exist. Ecosystem companies possess the capability to scale at a much faster rate than traditionally operated firms, or it's just simply the business models, the way we've gone about this in the past, the ones that we've traditionally conceived of and operated our insurance organizations on. So your ecosystem strategy can actually facilitate the expansion of your organization into adjacent but completely new areas of business by using complementary services. For example, and I'm just going to throw some random ones out. You can offer innovative hybrid insurance solutions, which also include service offerings with partners in other industries. For example, predictive maintenance, smart parking, preventive care, things like that. Another one example would be you need to harness insights from sensor data, Internet of Things, IoT. So you need to harness these insights from sensor data from other industries to help design products, to better quantify risk, and to discover new areas to insure. Another item is that you must take your expertise and offer your proprietary data and ability to analyze that data to third parties, including outside the industry, so such as data marketplaces. So this will help you derive new monetary streams. In this emerging ecosystem economy, it is most likely that insurance will be used more as a risk mitigation service for each of the grander global ecosystems that are now developing. However, it is realistic that insurance organizations move to constitute their own sub-ecosystems, catering to various institutions and individuals and mid-sized and small organizations. The ecosystems most relevant to our insurance industry, because I work in that industry too, and thus what should be under consideration for your organization as entry points include things like mobility, housing, health, wealth protection, business-to-business services, B2B services. You need to mobilize in these areas to grow your revenues. Your opportunities and your risks. What are they? Where do they lie? Well, here's some quick hits in that area. There is a massive opportunity for those insurance firms who react fast. I know it sounds simple to say, but it's true. And the reality is most of you are passive and not reacting at all, or you're just dismissive of this new paradigm shift that we find in society that your firm has to migrate through. You can't be in denial any longer. So move fast and react fast. Not all industries are well equipped or suited to face the challenge or pursue the ecosystem generated opportunities. However, the insurance industry is. The insurance industry in Canada, with its associated backwardness and willfully ignorant leadership, is not well placed to succeed. That's true. But the industry, broadly speaking, is well placed to succeed, provided it's got the right leadership in individual firms. So firms like yours that choose to pursue the opportunities generated in this paradigm shift within the ecosystem economy and fight the fight must be realistic, as no firm is going to capture all of the value that's obtainable, but you will get a piece of it. Larger insurance carriers are clearly better suited to evolve rapidly, adapt more rapidly, and essentially become more of an orchestra director rather than being like a brokerage who's just playing an instrument in the orchestra and following the leader. Well, what you need to do is take your brokerage and evolve it not just into a consumer marketplace, but you want to become that orchestra director who's commanding the attention of all those other players down there. You don't want to be just a single instrument player. So that being said, the onset of wave after wave of new ecosystems does provide numerous opportunities for your traditional insurance organization to reimagine and realign your priorities and initiatives. If you make the right choices now, then you can actually leap ahead of many competitors, including some of the outside disruptors. To succeed, you need to do more than just invest in technology. All of your investments must be viewed, reviewed, and assessed through the lens of your firm's dimensions, which are unique to your firm, so like culture and data, people, and so forth, things like that, in order to ensure that your investments directly dovetail with your firm's needs in the ecosystem economy. Adhering to traditional investment and expense choices, doing so will result in the failure of your firm. There are opportunities before all of us, to create new sources of revenues beyond selling insurance policies by rethinking your traditional roles and through the adoption of this ecosystem mindset. I can identify 6 key questions and areas
which will help shape and determine your firm's discussion with regard to its ecosystem strategy. 1. Strategy. 2. Customers. 3. Partnerships. 4. Technology. 5. Talent. And 6. Culture. Breaking those down quickly, strategy. In terms of your organization's priorities, where does your ecosystem strategy rank? I'm telling you, it must be number 1 by a country mile. So then number 2, customers. How does your firm's customer ownership, access, and engagement appear? What's your plan? Number 3, partnerships. How does your firm have a strong network of partners that will allow you to extend beyond your traditional insurance industry boundaries? 4, technology. Is technology seen as the fuel for your firm's strategy? It must be, by the way. You need the technology pathway. 5, talent. Is your firm positioned to attract as well as retain the most innovative entrepreneurial talent? Your office locations and geography, by the way, matter in that regard. 6, culture. Are your customers literally at the center of everything that your firm does, the way in which you think and the way in which you conceive?